The S&P is bouncing back yet again today following Friday's 2% rally. But how long is this actually going to last? We have some more really bad economic data out today showing the housing market continuing to weaken. Retail sales are even worse than expected. And yet again today, we are seeing another low volume bounce, which shows a lack of conviction and some people call a dead cat bounce or quote unquote bear market rally. Of course, this time without the bear market. Here in this video, I will share with you all of your breaking news today, all of your major headlines, everything you need to know as a stock market investor trying to figure out and sift through the weeds of this market and what could be coming next. Now, first and foremost, the first thing you should consider here is none of this really matters until we get to Wednesday. Like Wednesday is your big catalyst with the Fed meeting and the summary of economic projections. In terms of what's going to move markets, retail sales, NAHB housing market index, real estate data coming out tomorrow, none of it is going to even come close to the potential volatility that you will see on Wednesday. The last Fed meeting we had and the last summary of economic projections we had was December 18th. Within about 2 hours, the market sold off 3% on December 18th. You had a big volatility spike on the VIX. Heavy volume was traded that day on the SPY, and it really changed things. The markets continued to fall 5%, and we kind of shrugged it off as the Fed is just on hold for longer. Well, now that you're in a 10% correction and it looks like the economy is starting to falter closer and closer to recession, maybe inflation could be a little bit more of an issue via tariffs, what does the Fed say? Is the Fed going to be complacent and help guide us into a recession? Does the Fed want a recession? Or is the Fed going to start accommodating markets? That's going to have a dramatic impact to how the rest of this week and maybe even the next couple of weeks pan out. Now, we are also going to have Nvidia's GPU Technology Conference, also known as GTC, that is taking place today and going through March 21st. Now, Jensen Huang will be speaking tomorrow at 1 p.m. And then on Wednesday as the keynote speaker. This could also be important for broader markets, especially because it's going to move Nvidia and it could move other AI stocks, something to keep in mind for tomorrow. Now, in the broader economic data today, retail sales month over month came in really bad, okay? Last month was revised from negative 0.9% to negative 1.2%, not good. And this month's number came in at positive 0.2% versus a consensus forecast of positive 0.6%. So on net, over the past 2 months, retail sales is actually down about 1%, right? That's not great at all, especially versus consensus. You came in about 300% lower than expectations. New York Empire State Manufacturing Index, look at this one. You came in at negative 20. The estimate was negative 0.72. And last month, you were positive 5.7. So it looks like manufacturing in that New York area, not doing great at all. Now, retail sales excluding autos came in at 0.3%, missing forecast of 0.4%. And retail sales year over year came in at 3.1%, missing the forecast of 3.5%. Now, business inventories came in at positive 0.3%. Last month was negative 0.2%, meeting expectations of 0.3%. The NAHB Housing Market Index came in at 39 versus estimates of 42, and the previous month that was at 42. So real estate just cannot catch a break. Everything is indicating that the real estate market will continue to get worse. And if it does, that's going to start weighing heavily on consumers' spending behaviors. Because the sad reality of this is the top 10% of income earners in America, people that make well over $200,000 per family, they account for about 50% of the consumer spending in the economy. Now, those 10% of income earners, they spend, relatively speaking, based on how their assets are doing. If their homes are going up, if their stocks are going up, if there's clarity, they tend to spend more, right? Well, if home prices start to fall, if their stocks start to fall, cryptos start to fall, they're going to spend less. Okay. And a lot of that is directly tied to their homes, since that is people's generally number one adder to their net worth. If that starts to fall, people start to get concerned and spend less. And you could be in the early innings of that today. And you can see we did get an Atlanta Fed GDP Now update. You could see today, March 17th, was the latest update. And you came in at negative 2.1%. So you're still really in this negative area. Now, it says here, this morning's retail sales released, the nowcast for first quarter real personal consumption expenditures growth declined from 1.1% to 0.4% due to the FOMC blackout policy. Today's post does not include an update of the version of the model described here that adjusts the standard GDP Now model forecast for foreign trade in gold. That adjusted model will again be available after our first scheduled post-blackout update on March 26th. So you are going to get a big move in this Atlanta Fed GDP Now tracker around March 26th. But it is very possible that this could be negative for Q1. The CNN Fear and Greed Index today is coming in at 20, unchanged from Friday. Market momentum in extreme fear, stock price strength, extreme fear, stock price breadth, extreme fear, put and call options, extreme fear. Market volatility is neutral, safe haven demand in extreme fear, junk bond demand currently in greed. You can see the percent of stocks trading above their 50-day moving average, still in a pretty pitiful place, even though it is moving higher today, up about 2.8%. to 29.65%. So 29.65% of stocks are trading above their 50-day moving average. So more than 70% of stocks are below their 50-day moving average. That's normally where you are during these correction periods. So it doesn't necessarily say like you have to rally anytime soon, but it is a pretty strong indication that markets are weak, as we already know. Oil rises today as Trump says Iran will be held responsible for any future Houthi attacks. Oil today is rising 0.5%. The Dow is up 0.71%. S&P 500 is up 0.41%. NASDAQ down 0.1%. Russell 2000, one of the outperforming indexes today, up 0.71%. The VIX is down about 5%. to 20.71. The VIX overall still very elevated. And I don't think we've seen the end to this volatility. You could see bond yields today are down almost 3 basis points after the latest retail sales report that came in, again, worse than expected. Now you can see the reverse repo market today is falling again to another low, sitting at $89.496 billion. You recently spiked during this market volatility as people were turning more to cash, and you've been consistently in the 120 to 130 billion range. This is something the Fed has been talking about recently, that they really want to start winding this down, their QE or QT, and start getting to a neutral place with their balance sheet runoff by the time this starts to get down to pretty low levels. And you're pretty much there as of right now. And considering we have a Fed meeting this Wednesday, I think that's going to be something big that markets could react to if the Fed decides to end QT. French President Macron says fair trade that respects international rules is better than tariffs. And there's a lot of growing speculation that there's going to be some kind of reciprocal tariff reduction where all countries essentially say, hey, United States, we'll bring down our tariffs, you bring down your tariffs. Get it more of a level playing field for everyone. And Canada's Prime Minister Carney says in current times, it's more important for Canada to strengthen links with reliable allies. And he's really pointing towards Europe, and kind of sounds like an escalation of trade tensions. The EU will probe aluminum imports redirected by Trump's tariffs. and the EU to launch an investigation on possible safeguard measure to counter US tariffs. Trump says that attacks by Houthis will be met with great force. Trump says Iran is giving Houthis weapons, money, and intelligence. And Trump says after today, Iran will be held responsible for every Houthi fired shot. And also being reported today, Volkswagen's Audi division says that they will cut up to 7,500 jobs in Germany by 2029. And it is also being reported that US firms are buying tariff-free cobalt produced by China's Legend Resources in Indonesia. And part of what is currently boosting markets, at least a little bit, is the White House Press Secretary Leavitt that says we're in the 10th yard line of peace with Russia and Ukraine, following news just moments ago that the Kremlin and the White House will be speaking yet again today, raising optimism that the war in Ukraine could be coming to an end quickly. And again, the Fed meeting is on this Wednesday, 2 days and 27 minutes precisely from now. There is a 100% chance of no change to the Fed's, target. So you're not going to get a cut or anything coming in 2 days. What you really want to watch for is May 7th. There is currently almost a 21% chance of a cut May 7th. That is the next Fed meeting. And almost an 80% chance of a continued pause. I think after this Wednesday, you could see these odds rise quite a bit. That could lower 10-year treasury yields. And I think one of the big plays could be TLT heading into this Wednesday's Fed meeting. If I'm correct, and the Fed is a little bit more, dovish, if you will, acknowledges the economy's weakening, you could see the Fed raise those odds of a May 7th cut, and that would boost up TLT and lower 10-year treasury yields. Tomorrow, we will be getting building permits, preliminary data for February, housing starts for February, export prices and import prices year over year and month over month. You will also get housing starts month over month, industrial production month over month, capacity utilization and manufacturing production month over month and year over year. You also have a 20-year bond auction that will influence those 10-year treasury yields. So tomorrow is actually pretty important because, again, housing, if that continues to weaken, it's only a matter of time before that really starts to hamper or dampen economic activity, broadly speaking. Now, the SPY at the time of recording this video, the S&P 500, if you will, is up 0.6% today. The second day of a bounce. On Friday, you were up 2%, and now you're doing pretty good yet again. Now, I will tell you, from the low until now, you're up about 3%, which most people believe that you're going to see a 3 to 5% bounce from the lows. So on the low side, you're already there. You could bounce further to about that 577 level. The reason for this is you have to see bounces, okay? You cannot get a market crash that continues at this pace. It never happens, okay? Whether it's COVID and you fall a lot and then you bounce, right? Or it's 2022 where you fall and then you bounce. It's really the RSI when you want to look at this, okay? When you get oversold on the RSI, like you were with an RSI coming in at 28, the Nasdaq's RSI was even nastier than that. It was at like 20. You have to see a bounce, right? You cannot continue to fall that dramatically over an extended period of time. Well, what's happened is you've bounced 3% from the lows. The RSI is back to 40. So theoretically, over the next couple of days or weeks, you could fall, hit new lows, and the RSI would still not be oversold. And then you fall, you hit a new low, you flush out markets again, RSI hits around 30, you bounce another 3%, let's call it. And then you flush again, hit new lows, RSI, gets, back down to 30, and then you bounce, right? You kind of repeat this over and over again, like you seen in 2022, where the first drop in 2022, you fell, you got oversold on the RSI right around here, right? You bounced up, you fell to a new low. The RSI did not hit a new low. You bounced up again, and then you fell to many new lows. RSI still never got oversold. I think that's what we're in the process of doing at this very moment. Again, just letting the RSI recover a bit and then probably vulnerable to new lows. Some people are going to think this is a bottom for this correction. I do not think so. As long as the economy continues to weaken, it's hard to make an argument that you're priced for that. Again, considering the average year for EPS growth is 5.25%, and Wall Street's expecting between 11 and 15%. You're expecting twice or 3x the level of growth of EPS than you have on a normal year over the past 25 years, right? That is not pricing in a recession. That's really not pricing in a weakening economy, and all signs point towards that direction. What if you have EPS that comes in line with the historical 25-year average of only growing 5% a year? You're not priced for that. Okay. What if it's negative? You're really not priced for that. And the average EPS drop during a recession is negative 15%. You are seriously not priced for that. And, the worse the data gets, which I think it will continue to get worse, it's going to weigh on markets from a fundamental standpoint, from multiple compression and EPS compression. You can also see the last 2 days of a bounce have been very low volume. So people are really not rushing into this market. They're pretty nervous. They're playing a lot of defense. There's a lot of rotations like XLP, Consumer Staples ETF, is outperforming the SPY by about 2x today. Momentum is up 1.15%, the MTUM ETF, but still, really underperforming consumer staples. So there is a broader rotation into less cyclically vulnerable areas of our markets. And that's not a great sign that this is a durable market bottom. Although we probably do bounce to this 200-day moving average around 571, if you will, on the SPY before this bounce is over with. So ladies and gentlemen, let me know what you think about this information down below in the comment section. Is this the start of new highs for markets? Are things going to just go back to normal and uncertainty goes away and the economy strengthens again? Or is this the start of what could be your first dead cat bounce or bear market rally, if you will? Let me know your thoughts down below in the comment section. Have a fantastic rest of your day. Look at the sun outside. Go outside, get some sun. I'm in Michigan. I'm sure where you live, it's even nicer. Go outside, enjoy the fresh air, forget about what's going on in markets, for better, for worse. Enjoy your day. I will see you in the next one.